Hi, Matt McAleer, just after the close on April 5th. Another solid week across the U.S. markets and the international equity markets. Some interesting things from last Friday's conversation. John Musso was on talking about a 238 10-year, 2.38, down from 275 just a couple of months ago, down from 3.25 back in November. And what does that mean to the market? And John and I's discussion got around to the point that we don't know what that means. And that leads into something I want to talk about for just a minute or so. As traders and investors, it's something we always have to fight against, and that is dogma. Dogma is the enemy of traders and investors. Groupthink and thinking you know the answer to an outcome that is in the future is a quick way to the poorhouse. One of the things we like to do here at Cumberland is try to understand the other side of our trades as well as our own trades. And I thought John made some great points last week about an inverted yield curve and some of the noise that's been coming out almost on a daily and weekly basis about a warning of recession and so forth. We really don't have an idea of where a recession would be. Could be 12, 18, 36, 48 months away, out. We do know the business cycle has never been outlawed, so we'll probably have continued booms and busts for the next 100 years. But that inversion in the yield curve got an awful lot of people selling heavily in the equity markets. We had an ugly Friday 2 Fridays ago, followed up by some weakness. It's that automatic thinking, that dogma thinking, inversion equals weakness in equity markets, that we want to fight against. We don't know what that inversion means. We often get back to a quote that's been used around trading floors for years, and that is, what you ideally want to have is strong opinions weakly held. Strong opinions strongly held are the quickest way to the poorhouse. We want to have strong opinions about what we own, but with the flexibility to change our minds. So right now what we're seeing is a lot of good news in the equity market. How much of that is already in these prices? Tough to say. Very tough to handicap that. We're getting through towards the end of the normally bullish cycle in the year. We'll be interested to see what the rest of the second quarter brings. We're comfortable with our holdings, but we're still looking out with what can go wrong. As long as you're always looking at the other side of your trade, I think you can make anticipate positive returns in your portfolio. Have a good weekend.